thoughts or concerns to me, and we will try and improve that process for next time. Councillor Coles?
I can't get it on my screen at all now.
Okay.
Having had it recently, it's now disappeared. Yep.
That's fine. So we'll ask.
Sorry, Chair.
Member, no, it's fine.
It's probably pilot error.
We need to see it. So thank you, Simon. When I invite somebody to speak, please could you clearly state your name and if you're from an organisation, if you can state which organisation you're from as well, please. Do we have any members of the public joining us online? Are we aware? No. Okay. No members of the public notified. The meeting will be recorded, so all members are aware of that. The page numbers in the pack, there have been a couple of issues with, so we're going to have to dance around a little bit today to make sure that we're all referring to the correct page numbers. The pagination in the front sheet, the agenda for today, doesn't quite match the report pack. So if members could be clear about which report they are referring to, that would be very helpful. If members aren't able to attend the meeting, it would be helpful if you could arrange a substitute or let us know prior to the meeting. I've only had one apology today, and that's from Councillor Baker, and we don't have a substitute there. The work of the Audit Committee is going to be incredibly important over the next 18 months, and it's really important that we've got a full complement. So I'd just like to gently remind members of their responsibility to try and find a substitute wherever possible. So if I formally take the apologies for absence from Councillor Baker as agenda item 1, moving on to agenda item 2, declarations of interest. Does any member have any declaration of interest? No. Perfect. Moving on to item 3, which is minutes of the meeting of the 29th of June. So firstly, if we take these for accuracy, does any member have any concern over the accuracy of the minutes? No. Any matters arising from the minutes of the 29th of June that members would like to raise, which are not covered on the agenda? No. Do we need those formally proposed and seconded? Yeah. Can I have a proposer? Councillor Coles, and seconded Councillor Sully. Thank you. All members in favour? It's unanimous. Thank you. So moving on to public question time, we don't have any members of the public registered to speak. Item 5, which is the external audit update for South Somerset District Council. I believe we've got Barry and Beth online.
Indeed. Hello, Chair. Okay.
That's a report.
Yeah, so if I can briefly introduce this, Chair, and then I'll hand over to Beth to take you through a little bit of the detail. So initially we had been planning to come with the final version of the audit findings report and our audit opinion to this committee. However, as you can see on the list of outstanding items, there was still not a lot of work to be concluded. I can confirm that as of today's date, a lot of that work has been progressed, and therefore the number of areas where work is still outstanding is much smaller than that. We have escalated a number of issues to management to make sure that those areas can be resolved as quickly as possible, and we are looking and aiming to sign the audit opinion following the next audit committee in October. So we'll be bringing a final version of the audit findings and a fuller version of the audit findings report to that committee. Chair, with your permission, I'll just let you hand over to Beth, who can take you through a little bit more detail of where we are.
Thanks, Barry. Thank you, Chair. For members who were previously members of South Somerset District Council's Audit Committee, you will have seen elements of this report before. Each of the appendices at the back of the report from page 5 onwards of our report have previously been presented to that committee. So we have highlighted through the use of blue text, any of the new additions to those appendices so that it's really clear the items that have been found since that report was previously presented back in March earlier this year. As Barry mentioned, a number of outstanding items are listed on page 3 of our report, and we have made good progress in these areas and have managed to conclude on a number of the areas, and they are primarily just subject to final review processes. There are still a few queries that are outstanding, and there will inevitably be some follow-up questions that need to be raised with the audit by the audit team, with management, but management have worked through the majority of our queries and are working with us in order to conclude in a timely manner. In terms of the adjustments that have previously been reported, I don't plan to talk through those in a huge amount of detail. The one area that I did want to flag was in relation to the adjustment that has had to be made to the net pension liability as a result of the updated triennial valuation review, which was undertaken and produced as at the 31st of March 22, and the report was finalised in March 23. This has meant that the council has had to update their IS 19 liability position and obtain an updated IS 19 report from the actuary through the pension fund. And those adjustments are being processed in the financial statements. That's probably the single largest adjustment in the financial statements to date that we have identified. And the liability itself has moved materially, with both the gross assets and the gross liabilities within the pension disclosure also moving by material amounts. I wasn't proposing to talk through in any further detail, but I'm more than happy to take any questions that members might have on the appendices or any other detail in the report.
Thank you, Chair, and apologies. You did give very clear instructions at the beginning to introduce ourselves and the organisation we're from, so better late than never. So I'm Barry Morris, the Audit Director, and Beth Bowers, the Senior Manager from Grant Thornton, the External Auditors. Apologies about that.
Thanks, Barry. I've got a question from Councillor Coles.
Yes, thank you, Chair. The audit has not been completed yet, and I think the date for submission is meant to be tomorrow. No, 30th, sorry, Saturday. Now, where are we as an organisation when our auditors are not able to complete that? And the second question was on the pension revaluation. So the three-year is the triennial valuation. I wonder if anybody can tell me when we're likely to have that. I mean, I'm slightly concerned that as an organisation, we are not meeting the targets through no fault of our own. It's the auditors have not prepared their report by the September 30th deadline.
So, Jason, would you like to pick that one up?
I don't know if Barry wants to comment on the deadline. Just picking up the pensions issue. It's related to triennial valuation, but it's also not related to the triennial revaluation. Our one happened in 2022. Next month, obviously 3 years later. It's how the pensions are treated in the accounts and the underlying assumptions thereon. That's been the issue. But I'll hand over to Barry, who will talk about, and this is a national issue about getting accounts signed off. It's not a place any of us want to be, but I'll let Barry comment.
Thanks, Jason. So just to confirm, the deadline to which you've referred to, Councillor, the 30th of September, that relates to the 22-23 accounts. These are the 21-22 accounts, so they are more than 10 months out of date, because I think the deadline for those was the end of November 2022. Again, the audit of this year was delayed because of delays in completing the 2020-21 audit, and that had a knock-on impact of this. Now, we had always intended to get these accounts audited and complete by the 31st of March of this year, but again, due to officer capacity and a number of issues that we were identifying through the audit, that wasn't possible. Now, the triennial revaluation then took effect from the 1st of April, and what that effectively meant was that we had to go back, and the officers had to go back and get a further updated report, because, as Jason said, those new valuation figures came in from the 1st of April 2020, or were from the 1st of April 22. So we had to go back and look at those pension liability figures again. So that's why we were trying to get it done by the end of March. but due to a number of complex and interrelated factors, that wasn't possible.
Okay, thank you. I think I've got
If it- well,
Councillor
it's a-
Coles and Councillor
Follow on from that, if I may, Chair, through you. Not getting our accounts in 10 months after the deadline is slightly concerning about the position that puts us as an authority in, that we don't have the completed work. And from what I'm hearing, it's nothing that we as an organisation have done. It is in fact an issue that our auditors have. Now, does that leave this authority exposed, particularly when we are now looking at the theoretical date for the following year's submissions is the day after tomorrow, and they're not ready either. So I'm looking at a position where we have not produced this and got comments from our auditors about whether or not the audit is secure and everything is in the garden is rosy, or otherwise. And we're 10 months adrift on one, and okay, I'm 2 days prior, but I don't think we can get it done in 2 days either. So I'm worried where we are as an authority.
Okay,
Chair,
so
if I may.
Just, I know you're probably chomping at the bit there, Barry, but I suspect for all members, just to be clear here, that this is a national issue around the completion of accounts. There has recently been some guidance issued, I think, by SIPFA, around how we clear off some of the outstanding audit issues. So this isn't just down to our auditors. We've had officer capacity issues as well, and it's a combination of factors, the complexity of our assets being another factor. So I'm not defending anyone. I think we need to have a balanced position on why we're in the place we're at. So I'll let Barry come in because you were specifically requested for information. Thanks, Barry.
Thank you, Chair. Sorry to interrupting you. Councillor, I must say that the delays is not down just to the auditors. There have been significant challenges from the officer side in producing the accounts. And again, that was the main reason, as I said in the introduction, that we didn't complete the audit was because the 2021 audit wasn't concluded. And if you look at the audit findings report and the press around that, there were a significant number of issues that were identified in that audit. That meant a delay in producing the 21-22 accounts for us to be able to complete that. And then with the transition to the unitary authority, that meant that officer capacity was limited, which meant that the focus wasn't always on delivery and the timely conclusion of the audit. So I appreciate that there are national concerns both with Grant Thornton and other audit firms, but this is also due to pressures at the authority as well in getting those accounts completed. And again, we have been escalating those concerns through Jason and his team.
So I'll bring Jason in now, but just to reiterate Councillor Coles's question, which is, does the lateness of the accounts present any major risks to the organisation in terms of our governance?
Yeah, just pick up on that. Wearing our Somerset Council hat on, which we are here today, we've inherited a position, I don't like it, of outstanding accounts from prior years. In my career previously, accounts were produced on time, audited on time, there were no problems. That's not the place we are. The focus of the team now, since April, has been to get accounts across the line as quickly as possible, and the audit firms, we're working with them to do that. And actually, I have to say, the service I've received from all of them in April has been really helpful. We have been working together to get them done. It does expose us to a risk because account periods are open. Therefore, if there's some new national changes to things, you may have to go back and restate your accounts. We saw that with the upper tier authorities for some of the issues around highways recently and the valuations on those. So from my point of view, it is absolutely one of the priorities is to get all the accounts across all the predecessor authorities completed as soon as possible. But we are working with the firms to do that.
So I've got Councillor Fabahi and then Councillor Leishon.
Thank you, Mr. Chairman. And on the same page, on page 27, I have similar issues with our income and expenditures. If we don't have a clear guidance of our income and expenditures, how can we actually put the right tools in place to sort of to control some of it? indeed. So my concern is similar to councillor Courts, but we need to have some of these figures done pretty swiftly, in my view. Thank you.
Anything you want to respond on there, Jason? Nicola?
I think, Chair, he's looking at me to answer that. So probably in relation to that, I would say that we do have assurance around the figures that we have taken forward into the new council. What the audit statement of accounts provides is that audited opinion that those figures are correct. And so should any adjustments be needed, we have to adjust those. But I think we do have to remember that these are legacy council accounts, and it will be a completely different picture as we build Somerset Council accounts as one as we go forward. It's just the timing of this is unfortunate, and I do concur with Barry's response to the committee that in relation to South Somerset it was very much an officer delay.
And I assume to address Councillor Fabahi's point around the importance of knowing our income and expenditure for management purposes. Actually, we're relying on things like management accounts, we're relying on the outturn reports,
so
and the other budget monitoring processes.
Yes, Chair. So the statement of accounts is a picture in time. If you think of it as a snapshot of our accounts at a point in time, actually the following week those accounts could change because the valuation of a property could change. So it is a snapshot, whereas actually for income and expenditure purposes, we use management accounting, and we still continue to budget monitor in the way we would have done previously in terms of monthly monitoring of that, and you receive those quarterly budget reports.
Okay, are you happy with that, Habib? Yeah, thanks. Councillor Lation.
Thank you, Chair. I just wanted to make a point about the national situation and my concerns that are for authorities outside Somerset, where we hear that some of them have statement of accounts dating back to even 1617 and 1718, and the huge risk that those authorities are carrying, in my opinion. So I just want to say that I really appreciate and acknowledge the hard work and determination of the finance teams. And I know we don't have everyone from the finance teams with us now, but also the external auditors and internal auditors, and the work that they have done to ensure that the predecessor council statement of accounts will be complete, unlike other authorities in other parts of the country, and we will therefore be starting Somerset Council in a much better place than some authorities that have not had the challenges of local government reorganisation. Thank you.
Thanks, Liz. I've got Councillor Chilcott.
Thank you, Chair. Councillor Chilcott for Minehead division. I see we're missing nameplates today, so hopefully you can remember everybody's names. A couple of comments really, and also looking at that national picture, I absolutely get that, but there won't be that many in the country that are putting 5 councils into one. So I think our challenges are multiplied, and again, thanks to the staff. I'm sure every report that we get through this committee will be a sigh of relief and they can move on to the next. So looking at this one here today, but before I do that, actually, Chair, can I make a comment on the number of pages? We've got 642 pages here today. So my first, for me, that's too many to audit effectively if we want to be an effective audit committee. So my first question is, we're hoping that this will be completed. There's quite a long list we saw outstanding on page 27. We're hoping it'll be completed. I'm just wondering why it couldn't have just come to the next meeting, i.e. it be completed and we wouldn't have had 2 lots of reading to do. I know ideally it should come before that, but given we have got 5 lots we're dealing with, could that have happened? So that's my first question, please.
Okay, so in terms of why the report was scheduled for this month, yeah, with a follow-up when the audit's completed next month. Is there any particular reason that this has come before us today?
So,
Nicola.
Chair, I think it was just to give an updated position on where the audit for South Somerset was, but I take on board your comments. If it wasn't particularly helpful at this point in time and a verbal update could have been given, take that on board.
Just for future reference, South Somerset's audits have always been slightly more complicated than some of the other predecessor bodies, mainly due to some of the issues surrounding the valuation of assets, etc., which are more complex than some of the other bodies. So South Somerset has always been a particular joy to audit, and we've gone through this cycle a couple of times now. So welcome to my pain, firstly. I believe that we've closed down many of the outstanding issues. Stop laughing, Beth. Hopefully, my question to Barry and Beth was going to be, from the outstanding list of issues, is there anything that you are particularly concerned about? And I'll come back to you then, Mandy.
Happy to take that one, Chair. So from the list of outstanding issues, as long as we receive responses to the few things that still remain outstanding, there isn't anything that gives us significant concern that it would cause a major delay at this point in time. But obviously that is subject to what we receive. I can't give a definitive answer until we've had everything back.
That's fine. Go back to Councillor Chilcott now.
Thank you. I just think for committee, if there's not going to be a huge amount of change between one report and the next, given where we are and given the level of paper we've got, that would be great if we could perhaps have a verbal from time to time, so we can focus really carefully on what we need to focus on. So
I'll take that as learning for next time.
Thank you very much. My next question is, within the report it says that queries were not always answered in a timely manner, and we had a long list of outstanding. But I also read in a previous audit report for South Somerset, because previous to this council I was keeping an eye on all of them, the joys of finance. Some of the reading did not make good reading, I have to say. And can the 151 assure that the level of communication with certain staff, and I take certain staff from the report, is now satisfactory?
So before we bring Jason in there, just to bring everyone up to speed, there were some issues with communication between the auditors and the SSDC finance team in the previous authority, but those were dealt with in the previous authority, and the external auditors received apologies, and the relationship improved when there were personnel changes made. But I'll bring Jason in to answer your question.
Yeah, so in terms of our relationship with Grant Thornton, I think we have a very good relationship with them. We've enjoyed that for a period of time. As I said earlier, getting the accounts across all the predecessor authorities is a priority for us. We have chucked extra resources at it. The team have worked really hard to do that, and it's something we absolutely take seriously. So I think we are in a good place, and those points that were perhaps raised in the past don't exist in this council going forward.
Thank you very much. Culture and certainly those good working relationships with audit can help keep the fees under control, which we're all keen to do, I'm sure. So my next question is around MRP on commercial loans. I think it's on page 34. Seems to be a slight difference of opinion between the authority and the auditors. I'm just wondering whether someone could just explain why that is. I think here it said, in our view, the council should be providing for MRP on capital loans to third parties. And the reason for not adjusting was this council does not agree that statutory guidance indicates a need to provide for MRP on commercial loans to third parties. Can someone just, in a few short words, explain why there's that difference of opinion? Is it a grey area somewhere?
Paul, do you want to come in?
Good morning, committee. I'm Paul Matrowers. I'm the ex-SSDC.
Paul, could you just pull the microphone a little bit closer to you?
Yeah. I'm the lead from South Somerset, along with Graham Oliver. So there is the MLP policy, which the council did say that we wouldn't provide for MRP against the loans. In the guidance, it does say that actually you're able to vary it and to do that. So South Somerset have took the view that we don't need to provide MRP, because the other side of it is what we're doing is getting loan repayments as well. So getting loan repayments, which in theory is then covering the MRP. So that's literally the reason why we've got a difference of opinion. we were sticking to it to say we are correct in terms of what we are doing. Grant Thornton obviously had a different opinion in terms of the guidance.
So Barry, Beth, do you want to explain your point of view on this issue?
Thank you, Chair. More than happy to explain. So the guidance is not explicit, but within the guidance, in our view, there is implicit suggestion that MRP should be provided on capital loans to third parties. We have consulted internally with some of our technical specialists to confirm that it's a firm-wide view. So it's not just a Barry and myself view, it is a firm-wide view. And we have been having similar conversations with a number of authorities across the country. And we have been able to conclude at this point for the 21-22 financial statements audit that there is no material impact, and therefore this item not being adjusted for by the council would not result in a qualified audit opinion. But because of the size of the MRP we are suggesting should have been provided but hasn't, it breaches the triviality threshold, and therefore we report it to members and to officers so that they are aware of this difference of opinion.
So for my own peace of mind, just to confirm that my understanding is correct, then what Paul is saying is effectively that we didn't account for the MRP on the loans because loan repayments were being made by the third party, which would have covered the capital repayment. So in effect, the repayment was made via a different accounting mechanism rather than MRP. Is that a fair summary? Yeah. Is everyone happy with that? Do you want to come back on that, Mandy?
No, thank you. It's just that when you scale it up into the new authority, I know MRP plays quite a big part in our accounting. So if you start to scale it up and there's still a difference, it could then become a more substantive issue. That was the reason for the question. But I'm sure Jason and the team will have that all under control.
So I guess the question then is about prospective MRP policy and whether the current MRP policy is the same as the MRP policy that was in place for these SSDC accounts.
Yes.
Does anyone want to answer whether that's correct?
I believe Chair 151 is looking at me. So we have a so we have a MRP policy that is in place, but at the moment we do want to review it again to basically make it an MRP policy that is compliant and fit for purpose for Somerset Council, and that's on my to-do list.
Thank you very much. And my very last question, my specialist topic is audit fees. You'll be delighted to know. So when I look at the audit fees on page 37, the scale fee was 37,943, and the end fee has ended up at 125,943. That is a huge difference. My question is, though, there's a long list of additionals there. We've got a use of expert for PPE, £20,000. I'm amazed they're all exact zero figures. Are we looking at hourly rates for these, or is it just a thumb in the air and think that's roughly the time and the cost that's been reflected? I'm just always troubled when it's near complete thousands on things, because we all know it never, if it was an hourly rate, you'd never get to an exact figure. So that's my question. How have you, one, got to these figures, and two, that they're such lovely even figures?
Barry, would you like to take the question on fees?
Yeah, so absolutely, and just for Mandy's delight, I would emphasise that isn't the final fee. That was the estimated fee, so it is likely to increase because we too continue to experience delays and additional work that's required. So I do apologise about that. The reason it's rounded up to the nearest zero, so it's rounded up to the nearest £50, is it just presentationally that just makes sense from our perspective. So rather than having lots of odd figures in there, we just round it up. All of the variations, and we're trying to be really transparent and break it down to show these are the amounts that we've agreed with PSAA as the formal fee variations. Now, you're quite right saying that the scale fee was just shy of 38,000, but that was based on a risk assessment that was undertaken probably in the early 2000s, and it doesn't reflect the level of work that's now required, and the complexity of some of the arrangements that you have in place we have to use specialist experts to value the battery farm asset, and that continues to increase as more sites have come on stream, and that's produced a number of challenges, and it's also increased a number of audit adjustments in the accounts as well. All of these fees are subject to, or fee variations are subject to approval by PSAA, and due to the scale of these changes, our work is reviewed by PSAA to make sure that they can be justified. I can assure you that all of the fees are therefore justified by individual timeline entries. Yes, we're not making the level of return that you might think we are on this audit.
Thank you.
Mandy,
Just being really pedantic, you said you're levelling up all. I hope in balance that one or two will be levelled down to balance it out over all of them. Thank you.
I can see Barry sweating at the suggestion that we round the fees down. Fine. So I've got Councillor Sully who wants to come in with a question, and I think we need to start wrapping this item up because we've got a long agenda today.
Thank you, Chair. Just a quick question on the adjustments, because I was going to ask a question about MRP, but Mandy stole my thunder. Never mind. The next one down is the council has carried forward debt. This is on page 35. The council has carried forward debtors of 102,000 relating to elections included in its financial statements. And the auditors say we were unable to verify this amount to supporting information, and as such are not able to verify it is appropriate. My concern is if you haven't got the paper to substantiate it, and if it's a debtor, has that debt been paid to the council? Otherwise, if you couldn't substantiate it to an order, how would you substantiate it to a customer or client? Thank you.
Suspect that's one for Nikki.
Actually, it's not. I don't have the detail on that, but I just wondered whether Graham Oliver is online. Graham, are you able to help out with that question? Or we need to come back?
Yes. Hello. Thank you, Chair. Thank you, Nikki. No, I'm afraid not, because this, and I will have to, I will go away and bring back an answer to the committee. And apologies, it's purely before decisions got made before I came on board with supporting the council. But I will take this away and come back through the appropriate route to the committee, if that's okay, Chair.
Yeah, that's fine. Happy for that to come back as either a written response or come back next time. Okay. Fine. Unless there are any other burning questions on this, I'd like to move that we note the report from Grant Thornton, the expected sign-off date being at our next meeting on the 26th of October, and to note the additional fees contained in the appendix. Is everyone happy to do that? Simon? Oh, happy to note. Yeah, fine. Perfect. So I'm going to move on to item 6, which is the external audit update and audit conclusion for Sedgemoor District Council. Hopefully, slightly more straightforward. Barry, Beth, are you taking that one?
No, Chair. So it'll be me. That's
perfect.
Sorry.
Sorry, do you want to just introduce yourself?
Yes, I will do. Good morning, everybody. My name's David Johnson. I'm an audit manager at Grant Thornton. I'm not quite sure what the tense is now, the audit manager for the Sedgemoor audit accounts for 21-22 and for 22-23. I'm bringing today the audit findings report and the next item as well, but I won't jump ahead and spoil the excitement. But this is the audit findings report for the 21-22 accounts. I think a lot of the issues in terms of the delay for getting this have been discussed in terms of the South Somerset. Again, the delay in this is the result of issues identified in the 2021 audit rather than anything in the 21-22, which is reflected in the small number of adjustments within this report. It is, as members will see on page 3 of the report, which I believe is page 45 of the pack, we say we've completed. The reason the accounts are still open is to the triennial review, the triennial pension review that Beth, my colleague, mentioned previously. There are 2 stages to that. One, we had to await the reports from the actuary, and then secondly, we also require confirmation from the pension fund auditor to the efficacy of those numbers and how accurate they are. That has now been supplied. We are happy in terms of the assumptions. We are happy in terms of the means in which the actuary has come to their numbers. We do, however, unfortunately have one final thing to do, which is to agree the movements through the accounts, which should be done within this week. We should be done in the next couple of days, which would then allow the accounts to finally be signed off. There is nothing of much interest in here for members or things that I need to draw their attention to. Page 46 being a slight exception, as you'll see in the VFM, we identified a significant risk within the arrangements at Sedgemoor in 21-22. Appreciating that they are no longer a statutory body, we will, however, have to follow that up, and the issue may be identified in 22-23. And if it is, we will bring that forward to members here for them to make a decision on what they wish to do with that. Other than that, Chair, there isn't anything particular that I was going to highlight, and happy to take any questions, although I suspect South Somerset took up the bulk of any ones that may be applicable here as well.
So I've got Nicola and then Andy.
Thank you, Chair. So I just wanted to confirm what David mentioned in relation to that final check on the pension. We're not expecting any material adjustments through the account, so we would be asking the committee to be happy that those wouldn't come back if the committee are comfortable with that, because we're not expecting that to be the material and it won't change the bottom line figures. But obviously you can discuss that as you discuss the recommendation.
Yeah, I mean that's the position I'm in at the moment. But it's using the audit hat. I can never commit to something until I've actually done the work. There is no reason for me to suspect, because these are just simple movements through the accounts rather than any judgment made by management. So it's just a case of confirming the accuracy of those. It would have been done, but unfortunately the member of staff responsible has been unavailable over the last week or so. So we've had to take that into account. But it is for members to decide if they're comfortable approving the accounts.
Okay, so I'll bring. Sorry,
can I just confirm we would have endeavoured to get that done, that final adjustment. Unfortunately, because of the legacy situation with resources across, this one person we're reliant on to do that, and she has suffered a bereavement, so that's why she's been unavailable. It's not because of being directed elsewhere not to get this done, because we would have get it done.
So I'll bring Andy and then Mandy.
Thank you, Chair. My question's on page 56 to do about beacon methodology, because I've not heard this term before. It's really about the way the guidance on valuation of the HRA. Basically, there's a 7.25 million variance because the management used the wrong values and it wasn't the valuation. Obviously, this was must be a journal they put in. I thought that all journals were meant to be checked off by sort of line manager, so you don't sort of get these sort of problems. So could I have a bit of explanation what this beacon methodology is, and obviously going forward, have we got confidence when we're doing valuations, because we've obviously got two HRAs coming together, that we will get the right valuations in future? Thank you.
Unfortunately, we don't have anyone here from Sedgemoor.
I mean, if you want, I'm happy to answer those.
If you're happy to answer it, and then can I answer just the second part slightly? So just in terms of the team this will be a collective, valuations will be looked at by a corporate central team going forward, and so we will pick up to make sure we do all of the findings from all of these reports will be collated to make sure all of this information is fed into production of our new statement of accounts for this financial year.
Perfect. Thank you, David.
Just briefly, I guess, in terms of your two questions, so a beacon methodology is just recognising, if I understood your question in terms of what that is, it's recognising that going out and physically visiting 44,000 different dwellings is an onerous undertaking. So what will happen is they will identify an archetype, say a 2-bedroom flat, that will be valued, and it will then be extrapolated across the piece. So if you look at all 2-bedroom flats in Sedgemoor, they will all have the same value. It's a little more complicated than that, but that's basically the underlying thing. The 7.25 million, a pure calculation error. It was somebody hadn't sorted a spreadsheet properly. So the beacon valuations have been assigned to wrong properties, and when you resorted it, it came out with a 7.25 million adjustment. It was as simple as that. It wasn't anything particularly underhand. It was just a simple spreadsheet error.
I think generally on HRAs, because there are members in the room that have lots more experience in dealing with HRAs than others, it would probably be helpful for members to have some additional training on the differences between the way that HRAs are dealt with and other elements of accounting, local government. So I don't know if members feel that would be helpful. I certainly would find that helpful.
I think we've had a session on HRAs already, haven't we, from memory?
Well, if we could have a refresher, because I certainly didn't see that, Andy. But sorry, Liz, did you want to come back on that specific point?
I think the training we've had has sort of concentrated on the revenue side of HRA, but of course there's the capital side as well. And I think what we were hearing about was much more about the day-to-day running through an HRA, but and there is the clue in the name of housing revenue account. I think we've probably heard less about capital valuation and its significance to the new council. So I would certainly welcome any more training on HRA, because for more, you know, even those district members who are now Somerset Council members will have had different experiences, because one is the Almo and one is in-house. So it's an area where there is a huge amount of learning to be done. Thank you.
So I think I've opened a can of worms now, but I think it would be generally helpful if members could have the option of training, and if members feel it's helpful, then they can attend. If they don't, then there's no obligation. But Nikki, did you want to come back specifically on this point?
Specifically on this point, I think it's worthwhile finance looking at a suite of training that can go out to members. Finance Made Simple, capital revenue training. Just in terms.
No, I think we need the black belt equivalent of local government finance, because it's
I
going to be
think
huge.
sometimes finance people can talk in jargon, which is not helpful at times, and actually knowing or being aware of some of the acronyms would be helpful, is what I meant with Finance Made Simple. But I think probably a suite of training that we could offer. Members can choose to attend or not. They won't be mandatory, so you can dip into which sessions you think might be helpful, or if you think you've got all of the knowledge you need, then obviously no need to attend. But I'll just have a look at that.
Okay, I think that would be helpful. I think I've got a question from, is it Simon and Habib?
Chair, it was merely to support the particular point that Liz Lechon made, that there are two different HRA setups within the new organisation, one an Almo and one what was a district-run authority, and they are very different beasts. And I think helping colleagues to understand those differences is key to then understanding what numbers mean when we get to them in the audit report. So I too would welcome additional training. I'm not sure I'm up to do every single piece of training, but we'll have to see how many there are. But generally speaking, I would welcome the training. Thank you, Chair.
Habib?
Thank you, Mr. Chairman. I don't think you opened up the can of worms. I think it was Andy. So that, you know, that
I'm happy to Andy to take the blame for that.
You know, I'll put that to Andy's fault rather than yours. But in terms of housing revenue account, can we review the whole account, income as well as expenditure, for us to actually understand potentially where we can make some savings, or where we can actually improve the current status, especially in light of what is happening with Sedgemoor and Somerset and Taunton coming together. Because from my understanding, that housing revenue account has got certain income, and that income is totally actually committed to the expenditure. So any extra leverage that we have, then we can actually, or not, then we have to review it, properly, and then make sure that actually it does what we want it to do. So I'm looking forward to seeing a review of that account, in the whole, to minimise this council's risks going forward, basically.
Jason, are you happy to commit to bringing something to us at some point in the next few months?
Yeah, I think it ties in with the point on training. It's bringing that all together, the 30-year plan, how the HRA works, what that means in terms of capital financing, all of that. We do it through a training session, so that's absolutely explicit to members. Clearly, it's part of the budget setting process. You go through reviewing those anyway. So, but yeah, we'll pick that up.
Okay, right. So before we disappear down the rabbit hole of HRAs any further, I want to bring us back to the agenda, which is to note the report of the auditors. So we had a question about whether we were happy to essentially sign off the audit with the proviso that there are going to be some data movements. Is that so?
Yeah. So if there's any material changes or anything that is different to the sort of published papers as a result of the audit, etc., we will obviously bring that back to members. But I think what we're saying is we're not expecting any significant changes to anything that's published in front of you today.
No.
So are we asking members to give me as chair delegated authority to sign that off, subject to there not being any major change?
Yeah, second that.
I don't think even needs delegated authority. I think we could add a recommendation to that effect today, subject to we are happy that that's that.
Fine. Are you happy to move that, Mandy?
Happy to move,
I'll
yeah.
second it. Yeah.
Andy's happy to second that. So are members happy with that proposal? Yeah.
I did have questions on the
Yeah,
page,
that's
just to,
oh,
you're
that's
not,
fine.
yeah.
Okay, if you want to come back on to your questions, that's
Sorry, I wasn't sure if you were going to wrap it up there. So a couple of questions, if I may. So page 46, it says that you're not satisfied that proper arrangements are in place in terms of value for money. What happens with that now? We're reading in the report, we've got a new council. What is the impact or effect of that? We know why it is. We've read it in the paper. Is there anything we need to do with that? Because I know we are very careful with the reporting of putting reports through full council, etc.
It's unfortunate that there isn't a, well, I say it's unfortunate, only in this instance, we're probably grateful there isn't an auditor's annual report in here as well. When we raise a recommendation, they are on 3 levels. They are improvement, key or statutory. If a significant weakness will always be a key or a statutory. If it's key, we just follow it up. If it's statutory, which some people, a lot more organisations are suffering now, that is a more restrictive process in terms of where the approvals have to go to and who has to see it. In this case, and again, because the report's not here, this is Sedgemoor failed to comply with the Treasury management guidance. It's literally not bringing a report to council for approval. It is a significant weakness. It's one of these ones that we have to report because it's a significant weakness. I'm not 100% sure what Somerset Council's responsibility is in that case, because it's sort of almost it's a legacy organisation issue, not one that is Somerset Council's issue, but one we are sort of bound to report. It's one of the exciting audits.
so I guess we're looking for assurance that that weakness is not being replicated into the new authority. And Jason, are you happy to confirm that?
I'm happy to confirm if you look at the next executive agenda. They have quite a lot of reports in Treasury Management out, which will then go on to council. So we'll be fully compliant. I think, as said, we can't undo history. It's a fact. It didn't happen. New council, that isn't the case.
So we've closed the audit loop on that one.
Thank you.
Mandy, was there another question?
Yeah, thank you very much. So my second thing really is just a congratulations. I love the comment that the council's valuer was competent, capable and objective. I don't know who that was, but if they are still with us, please can we send it back? It's really great to have positive within an audit report. So if we could feed that back, just to say read it, noted, and that's really good to read. My next question was actually on the actual statement accounts. And I wasn't sure, Chair, if we were covering the statements of accounts as well. Are we into that? Because no one sort of talked about that.
Well, I think we were about to probably open the discussion on that.
I'll save my questions then.
That's fine. So as far as the audit report goes, then we've passed the resolution. We're happy that you've got the authority to get on with the work that needs to happen, and then presumably you'll notify us when it's happened. Yeah, perfect. So regarding the statement of accounts, then is there anything particular you want to draw our attention to? Mandy, do you want to come in with your question on the statement of accounts?
Thank you. A couple of questions. First one was around, I'm saying page 92, but I'll just check that that hasn't changed, but it's around housing enabling. And I'm just surprised to read that the budget for housing enabling was 1.695 million. The spend was only 395,000, so an underspend of 1.3 million. And along a similar vein, the housing thermal works grants, 823,000 budgets, and the spend was only 182,000, so an underspend of 600.
Sorry, can we just be clear on the page numbers?
I've got it down as 92.
Okay.
Yeah, are we with it? Okay. Yeah, 92. That's what I've got. I think everybody's found it. So
Page 12.
page 12, 92. It's the housing. If you go to the bottom section, we've got housing.
Got it now.
Yeah. Okay. Lovely. I was worried a moment my page numbers had all gone awry with the reprint of the paperwork. So, and the thermal works grant 823, spend 182, so 641,000 less. Firstly, I was quite surprised to see huge underspends there, because they are amounts of money that could have helped communities, and especially in the time with a lot of pressure on budgets. But secondly, my second question, what happens to that underspend?
Okay. Nicola, Jason, what happens to the underspend?
In truth, I'd have to look back to see what Sedgemoor actually agreed to do when they reported their year-end outturn. As you know, sometimes members agree carry forwards or the budget's lost. I don't know the details on that one, so I'd need to check through how that worked through.
So the why
won't it be ring fenced in the HRA?
Yeah.
So I think the wider point for me is there's quite a lot that's coming forward from predecessor councils into this council, and it's how this sort of audit committee has oversight of that, and that it's a strange scenario here, it's unusual, but how can we be assured really that when things are coming forward, they are going to the right places and being used in the right way and earmarking where necessary?
Nicola?
Yeah, so we're just carrying out a bit of analysis at the moment in terms of the underspends that have come in from each of the districts to actually see whether they were one-off underspend or whether they're going to be a continued underspend because of obviously the current situation with the budget. We are looking to see whether there's anything that can be taken in that regard. But I don't know whether reading down in the text, I'm not sure whether this was a result of some grant funding that came in that then wasn't able to be spent in a time there. So if it is the case that it's grant funding come in for a specific purpose, that would be held and obviously distributed out on a project that's been delayed.
So I haven't got a hand up online from Sarah Wakefield. I don't know if it's on this specific point.
Yes, thank you, Chair. I was just wondering whether the underspend was anything to do with COVID, because getting into properties to do the work was very difficult. If it was housing enabling, if that was improvements or anything that needed to be done, I may be wrong about this, but certainly there have been delays in getting those things done due to not being able to get into properties at certain times.
Sorry, can the people online put their cameras on when they have a question? Thanks.
Just for me, we do not want to be in a position where we're handing money back that could well help our communities. And I think it'd be a worthwhile piece of work. And if it is in fact due to COVID, there might be a good case to say, can we hold on to it and use it? I think every penny we can use to help people in Somerset is welcome at the moment.
I think those are points well made. Trust the team to capture that, and then maybe we can have a discussion at a subsequent meeting. Jason?
Yeah. The point to remember is, of course, this isn't last year, this is the year before. So this, in theory, would have been sorted out by Sedgemoor over the last year. So we'll take it away, Mandy, and get a bit of history on what actually happened. But Sedgemoor should have sorted this out. Either they would have repaid the grant, they would have carried it forward, spent it, or whatever. But it's a decision they would have made at year end.
Very last question, the letter within what we've got today is dated July 22 and it's looking for signature. I'm getting confused with the dates and what we're signing and when. So will that actually have today's date on it? I was just checking that because we've got a lot of things for signing here and I just wanted to check that it was today and not at July 2022.
Looking for assurance from officers.
Just a sort of typo because it's historic.
It's probably just a legacy from when we did this for Sedgemoor at the time. So if it's just a date, then the date can be changed. That's not
Thank you.
an issue.
Right. Okay, so are members happy to note the statement of accounts for Sedgemoor for 2020, 21, 22? Yeah. Members happy to note the audit findings from Grant Thornton? Yeah. Members happy to note the audit fees from Grant Thornton? And to approve the signing of the letter of representation subject to the change of date. Yeah, perfect. Excellent. So move on to item 7, which is the external audit plan for 22-23 for Sedgemoor District Council. Is this yourself again, David?
Chair, yes. Thank you. So I won't take members' time with this too long. This is obviously the 22-23 plan, given that we've now in the death throes of 21-22. So we're now looking forward to the 22-23. As members will be aware, following the merger, the biggest challenge to our work in 22-23 is ensuring completeness of information, and also those areas where potentially the knowledge resided within Sedgemoor, and that has now moved elsewhere. That said, we continue to have talks with management, especially Jason through Barry, to make sure that process is being managed. And so we will keep an eye on that as we go forward. In terms of the issues in here, hopefully members will be fairly familiar with the format of our plan. I think the one thing to say on here is we have key matters on page 223. It is obviously, the plan is obviously done at a point in time. Members will probably almost certainly be aware of the latest issues that have come out that I'm not sure we have referenced in here, but will inform our thinking, and that is the issue about RAC in schools and public sector assets, and the steps that are needed to be taken to address that. And the other one is equal pay, which is obviously a big topic at the moment, affecting Birmingham and potentially Sheffield, to name but two. That is more of a legal inquiry, but these inquiries, I have no doubt Barry has forwarded these to Jason, so that will be in the works, and there will be responses in due course if we haven't already received them. The main area of considerations are probably on pages 226 and 22 and the pages that follow. 226 outlines our overall sort of approach and how we're going to do it. The first column, significant risks, show those significant risks that we are going to look at. They are the same as the previous year, and our response and how we are going to address them is over the next couple of pages. Value for money arrangements, you will see we have two significant risks, or two potential significant risks. One is a follow-on from the one identified in 21-22, and a specific one in terms of the arrangements for transition to the new unitary authority. To give members assurance, we are aware that impacts more than one authority, and we will have the same risk at all the predecessor bodies. We are having a single person look at it. We're not having three people do the same thing three times. So there is an economy of scale that we are building into the process there. Outside of that, there is those who were at Sedgemoor and South Somerset, and the predecessor bodies will be aware of group audits. We have a group audit scope on page 230. Homes in Sedgemoor was material to Sedgemoor in 21-22. We will need to make that assessment, but it is more than likely that it will be individually significant again, so we've made that provision within there. Outside of that, Chair, again, there's nothing particular that I want to bring up. The timeline for delivery of this work is on page 237 with it does say to be confirmed in terms of the audit findings report, but we would look to bring that at the same time as the auditor's annual report. So we are working towards completing the work by the end of the calendar year with a view to reporting and if all is well, signing in January 2024. But again, that is a potentially, as we've seen with certain issues, a movable feast, and we will continue to talk to management to make sure that that is realistic. Other than that, Chair, I don't have any other points, but again, happy to take any questions.
Thank you. Mandy?
Super brief on this one. 2 questions. RAC. At the time you were covering from this audit, no one knew what RAC was.
No.
So I'm just wondering how you can, within this audit space, start commenting on RAC, bearing in mind it was an unknown for most at the time. So I find that uncomfortable because how the council could have done anything with that, I don't know at the time if they didn't know. And my second question is about, as we move forward again, 5 councils into 1, is any outstanding audit findings, how are they going to be mopped up for this committee and brought forward? Will we have one report perhaps that covers them moving forward? So for me, it was just that flow and transition from 5 to 1 to make sure we don't drop everything and not sort of follow it through to its conclusion.
Shall I? I'll cover RAC, and then the second one, obviously, that's not within my gift. In terms of RAC, I agree. You know, it is an unknown when the accounts are being put together. I guess it falls into the sort of the same premise as the triennial review, in that, unfortunately, because the accounts are open, you know, if you didn't, the fact that we didn't know about RAC doesn't mean it didn't exist, if that makes sense. And therefore, had we known, we would have had to put some consideration in on that. It is a big unknown at the moment. And I think we've asked councils to sort of go through their asset base, identify those that potentially have RAC, and then have a conversation with the valuer about whether that would impact on the valuation of the assets. And once we have all that information, we're then in a position to make a decision in terms of what the impact on the accounts are.
So follow up on that, Mandy, and then we'll come back for an answer on the second question.
My soft challenge with that is that you are looking at something with current eyes, whereas what we'll be looking at for the council did not have the benefit of any of that information. So I struggle with that. Surely you should be looking at, I know you've got that knowledge now, but you are looking at this period, not something that's happened subsequent. And I know that everything's open and there is a risk, but it is absolutely impossible for the council to do anything a long time after the event. And I just don't know how helpful that will be for all councils sort of moving forward. That's just a comment of the reality of the position, really.
So challenge has been made. I've got Jason to come back.
Yeah, I think, Mandy, that very point illustrates what I'm saying. We need to get all these accounts sorted ASAP, because next year there'll be something else that comes out that we didn't know about. And this is where you are really exposed now, because actually RAC did exist. We didn't know it was the risk it was. It's now clearly a risk. It now clearly potentially alters the value of some of your premises and the valuations thereon. So actually, the more accounts you've got outstanding, you can see the real issues there are. And if you look at some of the issues around Birmingham with their job evaluation, one of the, it's, you know, a complex situation, but one of the issues and factors there is they've got several years accounts open as well. That's why we are pushing to get all the accounts done up to date as soon as possible, and going forward, make our statement of accounts as high level quality as possible, so that the auditors can come in and quickly sign them off and go on and deal with another council. That is our aim. That is what we're aiming for, because it's really important stuff. And I think the other thing I would say around delays to the accounts and that, and I know there is national moves to perhaps consider a moratorium and not sign them off. this is public assurance around what we're doing with council taxpayers' money is spent appropriately and above board and all of that lot. This is getting lost in all the delays to audits, actually. We're actually losing now. You have a look at how many years outstanding accounts, and we're not as bad as lots of other authorities. Speaking to my colleague in North Yorkshire, he has one of his districts with 5 years outstanding accounts on it. That's not a place I want to be.
So I think we've taken the general point there that actually, in terms of protecting the council from risk, we need to look at closing these accounts down as quickly as we can. I've got Councillor Wakefield's hand up online.
Yeah, I just put my camera on. Just to say, factually, obviously, people did know about RAG. It's just factually, everybody who's in surveyors in building work knew about RAG. They just didn't identify it as the serious danger of immediate collapse, which was identified recently. So anybody who is running a hospital or whether it is, they've got props up, holding them up. They've known about it for a long time. What's happened is the government suddenly woke up and said, oh my goodness, schools might fall down. We need to do something. So just that's a factual thing about RAC. We did know about it.
Okay, thanks. Okay, so are members happy to note the external audit plan for Sedgemoor for 22-22? Oh, sorry, Habib, you wanted to come in.
Yes, with your indulgence, Mr. Chairman. I just looked at the value for money in the two areas of concerns, namely the transition to unitary, as well as the compliance with statutory requirements and governance, both of which were out of our hand. Basically, was dictated by Her Majesty's government, and we are here to sort of see how we can actually progress this going forward. So I think it's our responsibility to look at this, and see how we can best push this forward. But to me, every aspect of the council business we look at, it's the value for money actually sits right on the top. So can we actually have that as a sort of precursor in the business that the council does? Because I think it's so important, as a council, as a entity, we have income and expenditure, and unless we can balance those two, we're going to have this difficulty of addressing, the lack of finances to provide proper services.
So, does any officer want to respond to Habib's concern there? Do you want to restate it, Habib?
I think, Mr. Chairman, value for money should actually sit right on the top of our agenda.
So annually, obviously, the external auditors provide an annual value for money statement. So that is part of the council's existing governance framework. Jason, I don't know if there's anything additional we can do to give Councillor Fabahi assurance.
So yeah, in terms of the auditors do assess value for money, that's kind of stepped up in its nature in the last couple of years. Before it was a bit more of a tick box mentality, to be honest, rather than perhaps a real assurance to you as members. That has changed now. So as part of the value for money assessments, they do also compare our council's costs with other similar councils and try and identify where perhaps we are more expensive than other councils. Now that will be sometimes due to us being more expensive, or it might be it reflects a political priority. We want to do more in that area than some other councils. So I would say the new framework that the auditors are doing should provide members with a lot of assurance. On top of that, individual services will have quite a lot of benchmarking information. So when you drill down to an individual service, they should be able to show you their costs of their costs versus other similar comparable councils. That also is quite revealing sometimes in terms of either where we're very cheap and achieve excellent value for money, or perhaps where we seem more expensive, and you would have to question, is that by design or is that by accident?
Perfect. So are members happy to note the external audit plan report for 22-23 for Sedgemoor? Yeah. Okay. So moving on, we've got the external update for the pension fund for 22-23.
Yeah, thanks, Jeff. So introducing myself, Liam Royal, another audit manager from Grant Thornton. There are quite a lot of us coming to this committee at various points. I'm the manager specifically for Somerset Pension Fund, which is administered now by Somerset Council, was by obviously Somerset County. So this findings report is for 22-23, as mentioned. We are in a better position than some of the reports that come today, and our work is largely finished. Mostly because the pension fund is significantly less complex in many ways than the councils are. There's a small number of outstanding items which you'll note on page 3 of our report, which is page 251 of your pack. Most of those are kind of formalities and sign-offs in terms of kind of final review, letter of rep, kind of review of statements, so on and so forth. There's a couple of bits of outstanding testing there which are largely complete. The other significant thing there which is outstanding is the IT work. There's two components of that. Part of it is the IT audit is done for the council, and the fund kind of piggybacks on that because the same system's administered by the council. The fund doesn't really have any control of that. That work is further complicated this year because the council is changing its IT system, and as we were trying to undertake the IT audit, there was work ongoing on the IT team's time to be spent on Dynamics, basically, rather than looking backwards at SAP. So we are still waiting for the conclusion of the IT audit findings report for the Somerset Council, which will include the finance system element for the fund. The other aspect is Altair, which is the pensions administration system, which kind of runs the actual paying of pensions, that kind of thing. That's administered at Somerset through the partnership working with Peninsula Pensions. It's largely hosted and managed and run by Devon County Council rather than Somerset directly. So the IT work on the Devon side is also ongoing, and it's kind of out of the council's control and our control. It's down to the kind of Devon responses. So there's some things there which are kind of tailing off in terms of the IT work, which is kind of the biggest outstanding item that's left. In terms of headlines, findings, there's very little to report this year. Probably the key items looking at pages 258 and 259. The significant risks at the pension fund is around the valuation of the investments that the pension fund holds. These are obviously significant numbers. They invest a lot of money in various different places. Those are valued on different bases depending on what kind of investment they are, and they're categorized by how risky they are. So level 1 is fairly simple. It's almost cash or very near to cash. It's very simple, straightforward stuff. Level 2 is a bit more complicated. Level 3 is the most complicated. It's the least easy to observe. What we report on here is basically just the outcome on those significant estimates. Level 3, 100 billion quid invested in it. There's a very, very small difference in the estimation in our view, compared to what was in the accounts. Similarly, on level 2, a much bigger number at 2.6 billion. Again, less than £1 million difference in our estimation versus what's in the accounts. Those are mostly down to timing, down to availability of information. In the scope of what a pension fund deals with, they're only reportable here because we have to tell you something about what we did. But as you'll see, they're trivial. They're not requiring further reporting. There's no kind of unadjusted misstatement for these or anything else. It's a good outcome for the fund. It shows sort of some robustness in the estimation of those values. The only other significant estimate is on page 260, which is the value of the retirement benefits. Somerset is unusual because these are actually on the net asset statement, whereas they're often just kind of disclosed separately. So they are more of a risk here than they are at other places. Again, valuation, we're happy with the robustness of that valuation. No issue identified. And members will note the significant decrease in the present value of those benefits, which I believe we covered at the last committee I attended in terms of the triennial valuation. Beyond that, no major points to report. The only other thing I would draw your attention to is the fees page on Page 272. Just to reiterate again a point I made at my last attendance here. There's a slight change in how some of the fees are classified, which you'll see the IF19 assurance letters, as has been covered on a couple of the other councils' findings reports today. From the pension fund side, we do some work and issue letters to the auditors of those places saying, yes, we're happy with in terms of pension funds, here's some results from our work. That previously was a non-audit service, we had to report it separately. It's now considered part of the audit service, and so it's included in the main fee. You may remember the audit plan, they would have been shown separately, but that's now changed. There's no change in the amounts, it's purely presentational. Nothing else from me on the pension fund. Any questions at all? I'm happy to take.
Seeing as we have the chair of the pensions committee, are you comfortable with the report as it's laid out, Simon?
As the report that's laid out, I am comfortable with it. Yes, thank you. And the explanations given, thank you.
Do any members have any questions or concerns? Mandy?
Yeah, thank you. Just a couple of very short comments. When I started reading this, I got lost of whose pension fund it was. And I think it would have been really helpful in the introduction to just have a paragraph on the pension fund, because we obviously do that work for a lot of other organisations as well. And I think that got lost everywhere within the report. And it said approval of the pension fund. I think the Somerset pension fund. I'm just being picky because when you go back and search things these days, if you can have a full and complete title, it really helps. So my question is one around, we've heard that there's some IT issues that's still being worked through. So what happen? My first question is, what happens if those actions aren't complete, i.e. what happens next? And can we actually sign this letter of representation, bearing in mind there's some outstanding issues? That's the first question.
It's a good question because we don't want you to sign a letter of rep. So no, please don't. We brought it today because management have obviously presented it, but a point about signing opinions for pension funds specifically, although the pension fund gets its own audit and has its own annual report and set of statements, in terms of actually signing those up and approving those accounts, they're part of the county council's accounts for 22-23. And that's when the opinion is signed, that's when the statements are signed. And so we'll bring the letter of rep back at the point that the county council accounts are signed and sign it all then, because they have to align basically. This is for committee, the report today is for committee information, but it doesn't conclude the audit. It's unusual in that way compared to kind of a normal council audit.
So we will see this again when the Somerset County Council audit is signed off. So can members keep their questions brief in light of that? You will see it again.
So my question is, could we have left it off? I've read through it all yesterday. I'm just trying to look at the length of these, and if there's something there we don't need to see, we're going to see it again. Can we not put it in the papers? Because I will read it if it's there. I'll just leave that part with you. And just to say as well, well done, Anton. I can see you online. Well done to the team. It's another really positive and good report. I know how hard you work, and I know these reports on the pension fund normally go through really quickly through committees with not lots of questions, but we do not underestimate the amount of work, and that work's reflected and there aren't many questions. So thank you.
Thank you. So, Councillor Sully.
Just a very brief question, if I may. On page 269, it's basically we've got two prior year recommendations on page 24 to do with the IAS 19 assurances. Will these two outstanding prior year recommendations have any effect when you've actually, because it says it's not yet concluded, when they are concluded, will it, what implications will it have? Just want some clarity on that, please. Thank you.
Oh, sorry, I think if we refer to the next page, Councillor, on page 270, those are the prior recommendations there. In both cases, these are IT related, and so we're waiting for the IT work to be completed before we can follow them up. I believe in a lot of cases last year, the response was essentially, we're going to have a new system in 12 months, so we'll probably fix it then. But the outcome will be, once the IT audit plans are prepared. Obviously, this report will come back in a more finalised version, but also the county council report will come back with that IT audit stuff done as well, and that will kind of close the loop on those recommendations.
Okay, thank you. So, Tim.
Yeah, thank you, Chair. Don't know very much about pensions, so just want to try and understand something here. I noticed that the value of level 3 investments has increased. The value of level 2 has decreased. Does that mean that the investments we have become more risky? And is that due to the economic climate?
It would bring Anton in on the specifics there.
So all of our investments are actually changing in value on a daily basis. We as a fund value them monthly. I can show you a nice graph of the value of the fund going back to my inception in Post in 2003. And that doesn't make the fact that the value of a given investment has gone down or up doesn't make it more or less risky per se. It just means that the value of it has changed and it's changing all the time. That tends to reflect wider economic realities. Inflation is generally seen as a bad thing for financial assets. It means the value of your future cash flows discounted to today, if I start using technical language, is because of that inflation risk is less than it was previously. So inflation is bad. War is bad. So the impact of the conflict in Ukraine, and recession is definitely bad. And whilst we haven't had a recession either in the UK or in the wider global economy, economists and investment market operators remain concerned that we might have one in the next year. These are all perfectly normal. It sort of happens all the time. It's the way of things with investments. I should note also that the difficulty in valuing level 3 investments, one of the things with that is that you tend to get information later. It takes longer for the realities of the situation to feed through into the price. So some of that is to do with just that lag on level 3 investments. The third thing is that what the report doesn't show is where we've chosen to move money from different assets to other assets, and we've increased the amount of money we've put into level 3 investments during the year. So that some of that's just a cash movement effect rather than the value of the assets we own actually changing. Is that enough without
Anton, I think that
too
was
much?
I think that was very helpful, and you are a philosopher for our times. War is bad, recession is bad, and I think these are things that we should all remember.
Inflation is bad too.
Inflation is also bad. Sorry, I mustn't forget the third of Anton's trilogy. Thank you, Anton.
But just to briefly follow up as well, in terms of, because I talked about risk around level 2 and level 3, and just to address the councillor's question, we aren't necessarily talking about how risky the investments are in terms of how volatile their value is. That's not, I'm not going to say it's not what we're interested in, but it's not the focus when we talk about risk in an audit sense. What we're talking about with the sort of fair value hierarchy and the relative riskiness is how easy it is to understand what the value should be. And there's some detail in the kind of summary of management's approach, but essentially for level 2 investments, these are mostly items that are market traded or have very similar things that are market traded. And you can go and get quite a lot of public data and say, well, that's worth that amount, or it was worth that last week, so it's probably worth that now, or compare it to another one that's very similar, that's likely to be a similar value. The level 3 investments, they are generally here, they are private equity funds. They're invested in, investment managers that then invest in private companies. The public information about what those are actually worth doesn't really exist or is limited. So it's much harder to understand when the investment manager tells us that's worth 10 million quid. Is that actually worth that? It makes it more difficult to understand. It's not impossible, and obviously you can do the work to understand that. But it's just about that ability to make the assessment of how risky of how valuable it is, rather than the risk it's not worth it, if you see what I mean. Not a comment on the value, it's a comment on the information available.
Sorry, Tim, we're going to move on. Sorry, we've still got a lot of the agenda to cover, so I'm going to limit follow-ups from now on. So are members happy to note the matters raised in the report? Yeah. Are you happy to approve the audited accounts of the pension fund for 22-23? Yep. And are you happy for the letter of representation to go along with the SCC audit for signing at an appropriate moment? Yep. Okay. Perfect. Happy to move on. So do members want a 5-minute comfort break? Fine. We'll start again just after past. Right, folks, get back underway again. Thanks for being prompt. So we're moving on to item 9, which is the external audit update report and the Mendip District Council statement of accounts for 21-22. I understand we've got Duncan online who will present the report. Is that right, Duncan?
Yes, that's right.
Thank you. Welcome.
So thanks very much. I've also should say I've got on the call Matthew Cook, who was the chief accountant, and Jason Collier, who's the financial accountant who produced the report. So anything technical, I might refer back to them. So apologies, as we've been hearing, it's an advantage to get accounts closed off. So in the very final checking, in conjunction with the auditors from EY who are also on this call, Kevin and James, there's a change for the pensions. We had gone in with a pension assumption of a 2% on salaries, which was based on the MTFP presented by the then Section 151. But at the request of the auditors, we've moved now to the change, which is CPI plus 1%, which is a move of 2.2, that moves the pension adversely by 2.3 million. So we've changed that in the version that's been sent across yesterday and sent a table across where that changes. This repeats on a number of pages now within the statement of accounts. And then we redistributed the variances on page 17 of the services so that it's in line with the changes that were made during the audit for the actual accounts as opposed to the narrative. Apart from that, so it's 99% the same as it was before, subject to those 2 changes. So these accounts are unqualified accounts. They're unqualified for value for money, and they've got no notable items. If I just whiz through it quickly, there were some costs that were due to the pandemic. These were largely covered by government. Government did some strange things, such as fees and charges. They knock off 5% budget and pay us 75% of that. But basically, those costs were largely offset by the money we received from government. Services overspent. This is a result of they changed corporate priorities. So Mendip had a new corporate plan to run it to 23 when we go to unitary. These were covered by reserves, but also compensated by a better performance from business rates and from the commercial income, as we were cautious as we went through COVID as to how commercial income might be achieved. The highlights, there's mention in the report of climate change, sustainable transport. The grant schemes, which government nicely dropped on the same team we do the accounts. We've managed, by the time we got to the end of this financial year, to distribute £60 million in grants. The variances are commented on within the report, and they're the comments on the controllable variances and the performance management items. They were all either green or amber. There were 17 of them in total, and there's brief mention of the town deal and some of the other larger concerns of the council, such as the negotiations with the 5C contract. So I'm hoping that from what we're hearing, that if we leave the accounts open, they're always subject to change, and we'd like to move on to 22-23. So the auditors, Kevin and James, are happy with the amendments that we presented. Happy to take any questions from this point.
Just like to remind people that we have an unqualified set of accounts, which is always a very good outcome, and no particularly notable items here. So this is how we like it. This is how it was in the good old days. So if any members would like to ask any questions of these unqualified accounts, Andy, thank you.
Thank you. Yeah, just a quick question if I may, Chair. Page 415 is to do about MRP. I know we've talked about MRP earlier. basically it says to do with MRP, to do with investment properties, it says that these properties will be financed once the property is sold. And if the value of the property reduces below original cost, a reserve will be created over the remaining life of the asset. So basically they're saying that all investment properties, they don't actually take into account MRP, but going forward then, will we be taking into account MRP for investment properties? Because obviously they've not done that in the past, but is it prudent to do it in the future? Thank you.
Nikki or Duncan, something like that.
No.
So if members could remember, this is for 2021, and actually I think the MRP policy was changed in the following year. Duncan, do you concur?
We have changed our MRP policy. Jason, do you want to comment?
Yeah, sure. Hiya, Chair and Councillor. With regard to MRP for investment properties, the section 151 at the time, Richard Bates, agreed a MRP policy for investment properties. This was concluded that there was a MRP cost to the council for some of the MRP investment properties. There was a calculation done where there's a residual value, a low residual value, and there's a MRP programme on the difference between what we spent, which is the unfinanced capital, minus the residual value. So there's an MRP charge going through for investment properties. It's just not the whole charge. But going forward, obviously, we'll align to Somerset Council's MRP policy.
Happy with that, Andy?
Thank you. Yes.
Yeah, thank you. So are members happy to Monday?
Sorry, Chair, same question as previous, really. Are we covering everything in item 9 or just up to page so far? Are we doing it all together?
Let's do it all together.
Right, I'll crack on then if that's all right. So my first comment actually is I really welcome on page 371 the reserves and how they're all detailed. I found that really helpful, really positive. I think there was a lot of positivity in the report actually, including the findings. So we've in the annual governance statement we've got version 2. And why is it being published with formatting still showing? I don't know how that's sort of quite got onto the website, so I'll leave. I don't know if that's going to be corrected or changed.
I sent it across in that format. I wasn't quite sure if it's going to get changed because the annual governance statement was approved by the previous Mendip administration audit committee. But as things are still open, obviously it was reviewed by the external auditors who requested that a bit more detail was provided regarding the limited assurance, 2 limited assurance audits by swap. So that detail was added, and that is the what you can see in terms of the amendment. So it could have been taken out, but I guess it's more visible like that. So the final version will have that taken out, obviously.
Thank you. It is picky, but this is what our public picks up and reads at the end of the day. Page 519, and I'm jumping around, sorry. Should it be explained that the September 2023 meetings actually was Somerset Council? And again, it's just this moving from one council to another. So the 22 meetings would have been Mendip. It's just nice to note for posterity, I suppose, that this meeting today is actually with this council, not the predecessor. That's just a small comment.
Okay.
And I also very much I'm appreciative. You did an overview of the report, and I think within the auditor's report, I found that really helpful. I know what was interesting today is looking at the 2 different organisations and how they presented the report to us. And there were elements of your reporting, I have to say, that I found really helpful. And one of them was that overview piece. And I have to say, just a general comment, that most of the commentary was absolutely related to the council you were working with not a load of extra in there. So I actually found the report helpful. I found it more concise, and I found what was in it actually relevant to the councils. And I think that for me was my sort of overall feeling of the report. And I had one other question, but I can't find it. So if anybody else has got one, carry on.
Okay. Any other members? If not, are we happy to note the report and to approve the statement of accounts? Yeah. Proposed Councillor Coles, seconded Councillor Curley. All those in favour?
Could I ask you approve the AGS as well with the amendments?
Yeah. So I've going up the next
Sorry.
next item on my list, Duncan, thank you. So next item of business is to agree the changes to the annual governance statement. Somebody happy to propose? Simon, Andy? All those in favour? Sorry, Mandy, you
I got a bit lost. Can you remind me of the changes? Sorry.
agreeing to the changes to the AGS for 21-22, previously approved by the committee on the 3rd of August 2022. So it's Annex 2 and approve the final version, which is Appendix 2. Sorry, Liz.
Chair, I just wonder whether you wanted to give the external auditors a chance to come in at this stage before taking all of the votes.
Yeah, sure. If so, sorry, you'd like to introduce yourself?
Yes, thank you very much, Chair. So I'm Kevin Souter. I'm the partner from EY, in charge of the Mendip, or the former Mendip District Council audit, joined here today by James Stutterford, who's the manager. So I will keep this very brief. Duncan's given you the headline. Yes, it is an unqualified report we are proposing. We've had similar factors in terms of delays to the audits that have previously been talked about on this committee agenda. For Mendip in particular, that arose a couple of years ago from some objections to the accounts. We've had great support from the officers in terms of supporting the audit and the transition, which we are very much appreciative of, and just wanted to place on record our thanks to them. Continuing through to the 22-23 audit as well, which you've got the plan in your pack, but that is already progressing quite well. We weren't going to present much more. We were quite happy to just take questions from the pack. If members don't have any, we will advance as soon as we can to signing these sets of accounts, and that's one more legacy item ticked off for you.
Any questions from members? No. Are we happy to approve the AGS then? Yeah. Simon, Tim. Yeah. Everyone in favour? No. Any abstentions? Anyone voting against? No. Okay. That's fine. And to consider the external auditors report, which are appendices 3, 4 and 5. Simon? Everyone happy to note that? Okay. Have you got what you need, Duncan?
Yes, thank you, and appreciate the comments of the committee as well.
Yeah, thank you, and well done on getting through with a clean audit opinion. Perfect. Thank you all. Moving on to item 10, which is the internal audit progress report. Over to Alistair and Swap.
Thank you, Chairman. Yeah, just to confirm, I'm Alistair Woodland, Head of Internal Audit for Somerset County Council. Sorry, Somerset Council. Beg your pardon.
The pound in the swear jar.
The good start. Yes, that is true. Okay, so in front of you, you have the internal audit plan update report. So this is just to give you an update on the internal audit plan that this committee approved back in April 23. So if you first turn to agenda page 612, so this gives a summary of the overview of the audit plan and things that I'll be bringing to your attention. There are 3 limited assurance audit reports I need to make you aware of. There's 2 follow-up audits I will also give you an update on. And just to make you aware that there have been 18 additional reviews that have been added to the plan since April at officers' request as various things have come in. Also, just to highlight some good news there as well, the number of management actions completed since your last update, 27 actions have been closed as complete. And that is good to see, particularly given all the other pressures that are going on in the authority at this point in time. And if I may as well, at the bottom there of agenda page 612, we have started rolling out our dashboard access to senior management. So this will give access to the recommendation tracking dashboard and will lead on to further access to our audit plan information as well. This will also be rolled out to this committee as well, so you'll have real-time access to our information. So we can hopefully keep our committee reports as short as possible, and you've got access to our real-time information to go and view as and when you need to. Okay, so moving on to agenda page 614. So this just gives an overview of our work to date against the new corporate strategic risks. I appreciate the risk information is very much live and is changing. And as we've got on our list here, some of these were emerging risks at the time and have been more well defined. But this is to give you an overview of where our work sits against those strategic risks and what sort of coverage you're getting as a committee of our assurance against those risks. Obviously, we can't cover all risks every year, and so we do build this on the basis of trying to give a profile against those risks over a 2-year period. So as this was a new authority on the 1st of April, it's building up that over the next 2 years. So at the moment, you can see there are some gaps where we have done no work against some of those strategic risks, and so we're not providing that assurance to you at the moment, and we will be looking to make sure we cover off those where we can over the next 12 to 18 months. Agenda page 615. This gives an overview of the recommendation tracking dashboard. So this is an extract of the dashboard that is being rolled out to senior management and is what you will have in due course as well. I did circulate an Excel spreadsheet that gave you all the detail behind this dashboard. So you've got the details of the individual recommendations and what they relate to. As I say, once you do get access to our dashboards, it'll make it a lot easier than having to trawl through an Excel spreadsheet, which I appreciate is probably not the easiest of things to look through. And this way, you'll be able to manipulate the data and see exactly what you want. So moving on to the crux of the report in terms of just highlighting any significant control weaknesses we've identified during our work. So the first one to bring to your attention is on page 617. So the school's financial value standard. So local authorities are required to, or the local maintained schools are required to produce a return to the local authority stating their compliance to the financial value standard that they should be adhering to. So we've used and gone out to a number of sample schools to see if they are compliant to that standard, and the data they're submitting is a fair reflection of what the authority is receiving to make sure that the controls in schools are operating effectively. So we didn't report the individual schools by nature, but we do summarise it and bring that here. And this is what this report is highlighting, and does highlight that we've given limited assurance that there is some work to do in terms of schools' financial governance and control. I do recognise as well, obviously, school balances is a risk area highlighted for the MTFP pressure as well. So agenda page 618. So this is an overview of the Eclipse system. So if you don't know, the Eclipse system is the adult social care system. It's quite a crucial system. It's been in place for just over 2 years. So this was a post-implementation review to see has it delivered the benefits that it was intended to. Obviously, it's quite key to make sure if a new system's coming in that those benefits are being delivered. We have given it limited assurance on the basis that there wasn't really a benefit realisation tracking or defined method in place to make sure those benefits were tracked and delivered. However, it does appear the system has delivered benefits that the service wanted. So that is good news. So we have assessed it as a low risk to the authority. Moving on to agenda page 619, so to make you aware of the Homes England grant. So Somerset West and Taunton had applied for grant money through Homes England, and they have to have an assessment done every year. The last assessment was done in November 22 and was given a red RAG rating. Because of that, we were asked to do some audit work around the controls that are in place and what can be done to put the better controls in place to make sure they don't get a red RAG rating again. The risks, if they do get red RAG ratings, is that the funding can be withdrawn, and that would obviously be a financial impact to the local authority, and the funding is quite considerable. So this piece of work is highlighting there are certainly some areas where controls need to be strengthened around how they administer that grant funding to make sure they're compliant with Homes England requirements from that grant. And just to highlight in terms of our approach, obviously any limited assurance audit that we identify where there are weaknesses, we will follow up on those recommendations through follow-up work to give confirmation to this committee that recommendations are being progressed and implemented and the risk is mitigated. Then agenda page 620 and 621 does give you an update on some previous limited assurance audits that we highlighted and brought to this committee, and it highlights that the actions have been implemented. and that the risk areas in those areas have been reduced. Then one area to bring to your attention that is neither a limited or a follow-up is on agenda page 622. So it's also just to bring relevant information to you as a committee so you have good understanding of governance and control within the authority. Somerset Council are looking at rolling out a benefit realisation approach across the authority, and we were asked to do some work on that to see how comprehensive and robust that system is. The good news is it looks very good. It looks like it's a good model to be able to track cashable and non-cashable benefits through the authority to make sure they are delivered. The challenge will be making sure the entire authority follows that framework. So I appreciate anything corporately rolled out, it does need buy-in from all officers across the authority to make sure it works. And then finally on our report on agenda page 623 through to agenda page 627 gives an overview of the plan to date for quarters 1 and 2. And as I mentioned in my email to you, we are looking at reprioritising our work for quarters 3 and 4. So the plan that came to you in April did outline work for quarter 3 and 4, but given the change in the authority, we are looking at reprioritising that. There is some information that I will be sharing with senior management once I've had a chance to update the necessary risk information that's changed since we did our first assessment back in March, April time. Just a couple of highlights on this for your information, some things you might be interested in. Agenda page 626, there's an audit there on financial controls assessment post 1st of April. I'm sure you appreciate that with the new system coming in, MS Dynamics, it's good to have a good overview of where there are gaps or weaknesses in the current controls and what that means for our future work to make sure that controls are working effectively. And particularly as some of those key financial areas are obviously of areas of interest for external audit when they come to audit the accounts in due course. One thing that I did pick up, which I would like to mention as well, it was a comment by Councillor Chilcott earlier on the Sedgemoor accounts. On agenda page 624, we are signing off a grant there that says the home upgrade grant, and I think that does tie in with the thermal grant. So in terms of the underspend, I believe that money was spent during 22-23, and it requires an internal audit sign off to go back. I believe it is the same grant, but I will need to just confirm that, but it's been spent. And that is it from me. So happy to take any comments from members of the committee.
Hester, could I ask you a question about the school repair programme? Obviously, there's a large capital backlog of repairs, urgent school repairs across Somerset now. I think I've asked you whether there's any good practice that we can look at across other authorities in terms of how that work is prioritised and how we monitor the risk associated with that backlog. So I think for me, hearing that there's such a large backlog of urgent repairs makes me wonder about the safety of children and staff in those settings. And I'd just like a little bit more assurance around that programme, really. I don't really know what I'm asking you beyond, is there any evidence out there that might help us to make sure that the money is being spent appropriately and that we're prioritising spend across across that budget specifically? Mandy, to comment?
Just had a comment on that in a previous life when I was sat in Liz's seat. One of the main challenges with the schools and the work that needs doing, any disruptive works needs to be done in a school holiday period, and there's only 3 sort of main holiday periods a year. I think one of the struggles with the team was because they only got budgets sort of agreed annually. You've often got to be booking in. If we look at the April holiday, it's right on when the new budget starts. And I think the plea from the team was that if you could do a multi-year agreement, they could make the absolute maximum of that April, summer and autumn and Christmas holidays. So I don't know if that's still happening, Jason, but I know that was a challenge when they were trying to book work ahead in those holiday periods, if that helps, Chair.
Yeah, so any other comment from officers or members on that specific question?
Yeah, Councillor Roswijk I think it was the last executive committee, and I try to remember. There's been so many committees that have gone on recently. I can't remember which one it was. Did talk about the level of school funding and how it had been cut in terms of the funding that we receive as a council for those basic repairs. Off the top of my head, it was something like the figures have gone from £10 million a year down to £2 million a year. As a council, we put in additional money on top of that. That's something I know Councillor Chilcott was very keen that we actually put in extra funding on to address some of those repairs and maintenance. The problem is there's not enough funding in the system, is the honest truth.
I get that there's not enough money in the system. What I'm asking for is what's the process for prioritising how the money is spent? Is it against the level of risk? And are we following best practice in that area? I think that's the assurance I'm looking for. Sorry, I've got Liz, I think, wanted to come in, and I'll come back to Mandy.
Yeah, I just wanted to make the point that there is a learning infrastructure board, and all of that work is very carefully prioritised, but it is prioritised with an understanding that there is not enough money coming from government to do all the work that we know we would like to do. And so there is a strict prioritisation according to the funds available. I think it's gone down to between 2 and 3 million a year that comes from government. I've heard Ros White say that there's a backlog of up to 40 to 50 million if all of the work was to be done. So there are parts of Somerset where new schools have been built, and there are parts of Somerset where there are schools that date back to, I don't know, 100 years or more. It's quite a mixed picture, really. And that then brings in conversations about SIL, Section 106, and build of new schools. And also what I've seen in Street, actually, where a letter on Section 106 went to a developer as part of their planning application requiring £2 million for education purposes, but it didn't specify exactly how that money would be expected to be spent. So I think there's quite a big piece of work to do for the Learning Infrastructure Board. Not that it's my board, it's not for me to tell them how to work, but we also know that with the issues with phosphates, that developments have been built out at different rates in different parts of Somerset. And so the work that Liz Smith and her colleagues do on predicting school numbers will be changing because developments are being built out at different rates according to nutrient neutrality requirements. So I think there's quite a lot of work going on. It might be something that actually when we move to the risk item, it might be something that members of this committee want considered more under the risk management for this council.
So it's certainly reassuring to hear that there's a learning infrastructure board. I suppose the question for me is, I'll come to you in a second. I've got Mandy first, Mike, but the question is, where's that getting reported back to? Is that getting reported back to executive? Is that getting reported back to scrutiny? Where does that thread lead?
Through the executive lead member, I would suggest. There's also a highways infrastructure board, and until I formed part of the executive for this council, to be quite frank, I didn't even know they existed, but I do now.
Right, so I've got Mandy and then I've got Mike.
Yeah, just for clarity, really, those two comparators are 10 million to 2 million. Of course, we've had a lot of schools that have academised in that time, so we are then not responsible. So it's not a like for like comparison, just to say. And I think the other reassurance is that condition reports are undertaken on all of the schools. Those with the highest priority and urgent works are the ones that will be funded first. So I hope that's the reassurance, really. But odd things do always pop up from time to time. If you've got a failure of a heating system or problem with a roof, you know, sometimes it doesn't always follow a straight road.
Fair enough. So I've got Andy and then I've got Habib.
Sorry, thank you, Jess. Continuing on about the schools, there's obviously on page 617, we got the schools financial value standards theme. basically saying the key findings is that 3 of the schools are projected that they may have an overall deficit within the next 3 years. These schools may become unsustainable if they cannot address their expected budget gaps. And basically it goes on to say 97 schools are projecting in-year deficits 23-24. My main question is, who picks up the bill? Is that the Somerset Authority Council? And does this cover academies, or is this just schools under the control of the local authority? So who picks up the bill? Would it be us or government? Thank you.
It'll just be Somerset Council for maintained schools. It won't include academy trusts. And my understanding is that obviously schools have got reserves of their own, haven't they, which are ring fenced, which they'll use in the first instance, and then where they run out of money, I think the push is to academise. Is that right, or is that, are we picking up the tab? Somebody want to correct me?
The executive did have a paper recently about academisation. I would refer you to that. I don't think it's anywhere near as simple as that in Somerset, and it's also linked to kind of results for maintained schools compared with academies. But there was a very long paper quite recently to the executive on academisation.
Okay. Right, so Habib?
Yep, thank you. On page 614, may I have clarification on adult social care transformation program not achieving its financial target? Is that to do with specific consultancy company being over optimistic perhaps, or is there another reason for it? And as a matter of interest, where does children's services register on that? Because I haven't seen that on that register. So should that be there, or am I missing a point on there or not? On the supply chain, I see, we have no audit coverage. And I think this is an area that we need to have audit coverage. We mentioned schools. We don't know, basically, do we have main contractors, subcontractors? How do they work? Is there any efficiency saving that we can make there potentially with the way that actually, do we get value for money? So I think we need to sort of have some sort of clarification on that. So I'll be grateful if we can actually, if I can suggest review some of the council's main business in terms of the way our main contractors and subcontractors actually work. So a few questions mixed up in,
Okay, so does anyone want to pick up any of that, Alistair?
Yeah, I can come in first on that. So yes, so the table you're referring to obviously reflects the risks that Somerset Council been saying it for so many years. The risk that Somerset
pounds in a swear jar now. It's going up by inflation every time.
The risk that Somerset Council has in place and has identified since the 1st of April. So obviously our internal audit work is trying to align to those strategic risks to make sure we're giving assurance to this committee that those risks are being managed and mitigated down. So in terms of your point there, in terms of the adult social care, one of the transformational programme, that is part of our conversation with them. We'll be saying what audit work should be done in this area. So we will be looking to do audit work into that area. But where that risk is at the moment, obviously the risk paper will give an update on where the risk is in terms of its rating and whether it's still as significant as what it was when we put this table together. On the supply chains, absolutely. There is some work scheduled in Q3 and 4 around contract management encompassing supply resilience and supply chain. We did do some work a couple of years ago when it was Somerset County Council, but recognising that risk is going to change because of all the districts coming on board, all the new contracts that they will bring on board as well. So there is some work scheduled to look at that in Q3 and 4, but what we need to do is just make sure, is that still the right place for us to spend our time, which obviously from what you're saying, you think it is a good place for us to be spending our time. I probably agree with you. I think it is an area of importance. So, but it's just having those conversations to make sure we cover it, and we will be looking to cover supply chain and contract management.
Habib, does that cover the main thrust of your question?
If we all agree, I'd like to see that to be reviewed.
I think Alistair's saying that that will come forward as a future audit.
Yeah, I think one of the key things with subcontractors is that we seem to go to like a main subcontract because we use like this framework for purchasing. But you'll find most of the main subcontractors then subcontract it to a local firm who couldn't get the contract in the first place. So that the main contractor is making a margin, but not actually doing the work. So that's, I think, is a key point to look forward, because we're spending out, you know, millions of pounds a year on contracts whereby somebody's managing the contract but not actually doing the work per se. So I'll leave it there, Jason. But that's right, Alistair. Thank you.
Thank you. So moving back to the internal audit plan, Mandy.
Thank you. Couple of points. First one's a typo, actually, and I really apologise. It'll save an email to me. But on page 608, there's the word pale, and I think it should be place. And I only mention it because it's probably a cut and paste into the next report and the next report. So page 608, item 6, it says pale. I think it should be place probably, but pale doesn't make much sense in the sentence.
And if we're doing typos, there's a typo on 624, it's Norton sub.
I don't normally pick them up, but because it's one that's because it's something that will probably be repeated report after report, I thought it's just worth mentioning. So a couple of questions from the report. We've talked about the schools a lot. For me, it's a so what question. So we've had the report, it's told us what the challenges are. For me, it's the what happens next. So I don't know if we can get a response from, I think we can do that as an audit report. We could ask for a response. This is the findings. What are you going to do about it? And I think it's such a big issue that it might be something we want to ask what happens next on. Can we do that?
Alistair?
Yep, you can certainly do that. There is work going on at the moment around school balances, if that's the particular area of concern. There is a project running. So there is another audit we're doing at the moment with the service running alongside them in terms of holding working groups, working with the schools to try and get them to a more sustainable budget position.
Perhaps that's the answer to this then. So there's going to be another one coming forward on that. Okay, that's fair enough. Thank you. It's just such an important issue. I didn't want it to just sort of.
No, I think you're absolutely right to raise that, Mandy. So we'll get a further report at a subsequent committee on that.
Thank
and
you.
then we need to, I suppose, possibly ask the portfolio holder to come along to that meeting to discuss how those risks are being managed.
Yeah, I think it's of sufficient importance to warrant that. My next question is on page 619. How much funding was lost and for that provision for affordable housing? And I'm just going to find. All gets a bit sketchy now because this is very late at night. So non-compliance with Homes England capital funding requirements leading to a loss of available funding for the provision of affordable housing. I don't like to read loss of provision of funding for affordable housing. Have we got any idea like of how much that was?
So in terms of the first assessment that was done on Somerset West and Taunton in November, and it was given a red rating, there was no loss of funding. It's obviously a threat that if you keep getting red ratings, you could lose the funding. It is within their Homes England to withdraw that funding. At the moment, none has been lost, but of course, if the controls aren't in place to comply with the capital funding agreement and the audit keeps returning red ratings, then that is something that could happen.
Thank you. I just think on the wording, it said leading to loss of funding. It'd be helpful to say could, if not corrected, lead to a loss of funding. So I read that as that there was a loss. Page 620 talks of previous plans. It's just a question, is this correct given we're a new council? And I'll see if I can find it. Yeah, these are follow-up audits and advisory work. So my question was, being we are a new council, is it still follow-up audits and advisory, bearing in mind when new?
Yeah, so in terms of when Somerset Council was formed, there was an exercise we did looking at what was going to change and be subject to a new audit and whether the recommendations were still relevant moving forward. So this was an area that's identified and agreed that the recommendations are still relevant and would be subject to a follow-up audit. So everything in the recommendation tracking dashboard that you will get access to is relevant now for this new authority, Somerset Council.
And my last question is, was that done across all the districts, previous districts and the county, and everything relevant has come forward? Is that what you're saying?
That is correct. Yeah, everything should be relevant for this new authority. The only ones that are slightly possibly subject to differences is there's some follow-up recommendations that relate to Somerset County Council's contract management review that we did, but that area has significantly changed, and hence why we think it should have a full review again in quarters 3 or 4, as opposed to just following up on those recommendations, because so much has potentially changed in that area. But we haven't lost those recommendations yet because we haven't programmed in a new review.
Thank you. I think that's a really important point, Chair, that even though we've got items that have been picked up with predecessor councils, they're not being dropped, they are coming forward, and those that need sort of further actioning have come through. Would have probably been nice just to see a commentary on that somewhere, just for reassurance, Chair. Thank you.
Thank you, Mandy. Any further comments on the internal audit report? No. So are we happy to note the position and yeah, everyone happy? Yeah. Perfect. So moving on to strategic risk management update, we've got Pam and Angela in the room. Hello, Pam and Angela. Be very patient as usual. I did try to move you up the agenda today, but everyone else needed to go earlier, so I'm really sorry. I will keep trying to push this up the agenda for you.
Perhaps we could have our own committee meeting. Thank you, Chair. Good afternoon, everybody. Strategic risk report, you will notice, isn't in the format you're used to seeing. And that's because Andrew and I are trying to push this forward in a different way. We're trying to give the information that we think people want to see. So we're trying to make it a bit more whizzy and a bit less reading a table of words, and, you know, people read them anyway. So we're trying our best. This is our starter for 10. We will be adding lots more to it. So when we come back to in January, you will see a bigger suite of information available. So the things to note in the report, so that starts, I think, on page 629, 31, somewhere around about that, 631. Since you saw this,
633 is when the report started in my pack.
633. Since we came last time, which I think was June, yep, we've added 2 more risks to the suite. We're now up to 15 strategic risks. So we added one about general housing, we added one about the LCNs and the commitment to the business case to deliver LCNs. So we've added those 2. Alistair was just talking about the adult social care transition. I can tell you that that is a medium risk. So they've scored it as it's a feasible risk with a major outcome, a major impact. So it's a medium risk for that one. If we chuggle down through to the appendix, which I believe is on page, well, I'm not sure because mine now says 1 and it's not numbered. 634. 634. So this is a suite of slides that we presented to CLT on Monday this week, outlining the position so far. So we produced a heat map that shows the scatter of the current risk score for the strategic risks. So they are all medium or over. No, like I say, there are 15 of those. Next slide down, we split it also by the council priorities. So we've mapped all our strategic risks to the most appropriate priority. So you can see the spread of how our strategic risks are helping to mitigate and make the priority a success. The next slide was an overview of all the council's risks, so operational risks, spread across the directorate that they belong to. So this table gives you the number of risks that that directorate owns and the total number of those risks that are either rated as high or very high, which would be, if we'd given you the colour thing, it would have been either orange or red.
Can I just ask quick, because we haven't got colour, it's black and white. Okay, so because obviously this table on page 635, obviously you've got a 2 in there with a 25, right. So that's 25 risks and 2 are high, is that what it means?
25, 20 and 16 are all red, very high.
How do we know what those risks, how do we then know that those 2 high risks, what are they?
You're on continent. So, yeah.
How do we know what?
So on the next slide, broken down by council priority.
The number in the brackets. The number in the brackets behind.
So
right.
One of them comes under the Fairer Ambitious Somerset, and that is the Sustainable MTFP. That's our 125.
And the other budget overspend.
And the other one is about budget overspend, also for the same priority. Is it possible in future, Debbie, to have the table printed in colour?
What it is, it's the new presentation. I'm following it now.
Yeah, but it would be helpful if the heat maps were in colour, wouldn't it?
Thank you.
Yeah, okay. But we'll see if we can get that sorted. So yes, there are 2 strategics. They are both about money, both about the budget. And they split it down. So the numbers in brackets afterwards are the score that that risk holds. Like I say, the lowest rating is medium, and that's the one about the VCF SE, which is also Fairer Ambitious Somerset. The directorate ones, we haven't given you any more detail other than how many there are and how many of them are high or very high. We are working on expanding all these tables. We're working at heat maps for things like actions, the live actions that sit underneath. And we're going to look at tables as to how we can best say how many they've gotten, how many are perhaps past their review dates, or how long, in fact, they've been around. So in January, we hope to give you a bigger suite of stuff. We are planning, because we now have the new upgrade of JCAD to version 5. It's landed in Angela's and my box this morning, so we've been sneakily playing with it. That will be rolled out completely to all people by next Monday. It's there already. We're just not telling them because we've got some work we want to do. And we start training on that next Wednesday. So if anybody would like to be included or would like me to do a single one-to-one session, I am more than happy to do that. Just need to message and we'll put it in the diary. It is slightly different in look, and it gives us more functionality than what we had before, which is why we're hoping to be able to improve the way we visually demonstrate to you what's going on. And we're hoping that sometime, probably by April, we will also be able to automatically report through to Power BI. So give you something a bit whizzier than a PowerPoint slide. The very last slide of ours tells you about what we've been up to since April. So Angela and I together, what we've been doing and what we hope to do through to the next April and beyond. So we've done the JCAD bit, that's in. We're going to bring together some of the main people that I know previously and have been identified since as risk people. They're not risk people, but they have an interest within the directorate that they work in. So we're going to bring them together next week. We're going to show them the new JCAD, but we also want to talk about, is there a need to resurrect something that we had previously, which was called the Strategic Risk Management Group, which looked at strategic risk, but it also looked at what was happening in individual directorates and in the world of risk management. So we would have people come and talk to them about principles around risk management, or even invite somebody from another authority to talk. Now we're all teams based. That is even easier to do than it was before. So it's a training opportunity to people. We may be able to resurrect that. We are going to start work on risk appetite. This authority needs a risk appetite. Audit picked us up on that when we were Somerset County Council, and it was we weren't in a place to do it. Now we're in a place to do it. Angela's already got a framework that she used at Sedgemoor, which is exactly what my head wanted. And she said, "Do you mean this?" And I went, "Yes." So we're going to work on that. That will hopefully be in draft by January. But there's going to be a lot of people that need to be spoken to get that in a position to be in draft. But we will try and push that through and get it in January, because we would like it in place for the next financial year, next year, so that we can start reporting on risk with appetite as well, because that changes the picture.
Thanks, Pam. Are you happy for me to open up to questions?
Yes, please.
Okay, so I've got Andy and then Mandy.
Thank you very much, Pam. That's very good. Will we in the future still get the more drilled down? We used to get obviously the management information, as in, you know, how we're going to overcome the situation. I'll put it that way. Mitigations. That will.
Yeah, we will still be sending you a risk register view. It's just I was inconsiderate and went on holiday when the report was due.
Oh, that's okay. That's okay. You're allowed holiday.
Yes, I shouldn't have bothered. So you will still normally get a risk register. Yes,
that's lovely.
In fact, I can send you one out from the new system as my test.
Yeah.
So I will send you one out, which will give you the present position on that.
Yeah. Will we be ranking the risks then? When we have the risk register, will the top risk be number one, the next risk number two? Because it's only that it's just got brought up the day when we did the interview for the new person for the coming onto this committee. She was looking at the information that the council publishes on the website and said that normally with risk, you would probably in a report put your top risk as your number one, and then number two, number three. Will we do it? Will we be doing it in that way or not? It is fine. Right. So we do.
So it will always start with the highest rated red, and then it goes to orange, then it goes to medium, and then it goes to green.
Oh, lovely. That's great. Thanks for that, Pam. Thank you.
Mandy.
Thank you. A few questions. First question: are we still using the 5x5 risk matrix?
Yeah.
Fabulous, because this was a 3x3. So my first question: I would love this committee as an action to ask this council to reinstate the risk matrix at the top of every report. Risk has been brought down and down and down our reports. It's a little paragraph often tucked at the end. It used to be front and centre, and I think given the red risks here, I would love to see that as an action or a recommendation for this council. So I'll leave that with you as a
Do you want to move that, Mandy?
I'd happily move that. I think it's important moving forwards, given the level of reds we've got. I don't know if I need to ask our risk experts. Do you think that would be helpful?
So do we have a seconder for Mandy's proposal? Norman? Yep. Perfect. So we've got a proposal. So all those in favour, raise your hand. Fine. Any abstentions and anyone voting against? No. So our recommendation back to full council that we reinstate the risk matrix on all of the reports. And then if we could get a progress update at each audit committee meeting about the rollout of that recommendation, and if there are any concerns across the organisation about implementing it, that'd be the right place to bring it. I assume that'll be a training program, for example, as Andy's just mentioned, to authors of reports to make sure that they know how to use that as a tool and why it's important. Yeah, Jason, do you want to come in?
Yeah, I think what's happened in the past, the report template was really clear, and you had to put in a risk score. I think what's happened is that box is still there. People are not always filling it in, and the quality of the words around some of the implications in the report, particularly on the risks, isn't very good. It is one of the things, so I'm pleased the committee's done that, because it following up the actions around the implications and reports. Personal view is I think they should be written by the experts, not the report authors, so slightly round the other way. I'm not a qualified lawyer. Why am I writing the legal implications? Much safer to have a lawyer to do it, etc., etc. So that's I'm happy the committee's done that, and I will take that away as a wider action to improve the quality of those, because it has noticeably changed on risk in the reports.
So one of the other things that I've noticed recently when reviewing another report is that in the report template, the organisation doesn't always ask the question about the economic impact of its decisions on Somerset, on the wider economy, on our businesses and communities. And actually, that is key to making informed choices about which projects do or don't go ahead. So I personally would love to see the report template amended to include an assessment of economic impact of projects, particularly at a time when we're reviewing projects. So is that something that could be implemented, Liz?
But Chair, out of interest, I've just been looking at the executive reports for next week, and on the one that is kitchen replacement programme, there's a really good example there of the risks, very clearly identified, and it might be just worth noting that there is at least one paper in the executive papers, but that would be useful in demonstrating how that could and should look for other papers too.
So I suppose that there is a wider question about the report template and whether that is fit for purpose. Who reviews it? Who's the accountable officer for that?
It's through the Constitution and Governance Committee, so it's not this committee's purview, but you're welcome.
Okay, can I make a recommendation to a referral to the Constitution and Governance Committee that they consider the merit of introducing an economic impact assessment to business cases when deciding the success or failure of those projects? Mandy proposed. Yeah, I'm going to propose. Mandy seconded. All those in favour? Right. That's so done. Perfect. So are we all happy? Sorry, do you want to carry on?
That was question one.
Yeah. Okay.
So just at the top of the paper, when we're looking at our recommendations for today, it says, going up, recommendation 2, the executive lead member and officer agrees that. Is that a typo? So it's on page 629. I'm just checking. So we need to delete that from the recommendation bit.
It's a template that doesn't really fit this committee.
Okay, well, there we are. That's something else too. And then I think you've put the slides in, and I struggled, as Andy did, trying to work out the sort of change of what was going on. So I think that moving a figure from one slide to the next is quite difficult for me to follow and Andy to follow, so I'm sure others to follow. But I think when anybody is putting in slides that have been presented elsewhere, it's really helpful to put these are the slides that have come from there, because one of the lines on the slide says approval before reporting to the audit committee on the 28th of the 9th. So when I read that, I thought, what's it talking about? Makes sense with what you've said, but on reading it didn't. So I think if you're pulling information from elsewhere, it's just handy to note that in the report. That's it. Thank you very much, Chair.
Thank you. Any other questions on this report? If not, oh, Liz.
Thank you. I don't want to wreck Angela and Pam's day, but on page 636, I know if more colleagues were in the room, I think people would make the comment that a lot of the strategic risk headlines actually come under more than one priority. And I wondered whether we could have a better table that was in the order starting at 25. To put the strategic risk headline in the left-hand column, and then in columns going to the right, actually pick up which of those priorities are included there, because for sure, sustainable MTFP is more than one priority.
Mandy.
As that can of worms has been opened, I didn't find it helpful at all to link to the priorities. I didn't think that risk would necessarily fit alongside priorities. hasn't been done before, and I don't quite know the advantages, because for me, risk stands of itself and doesn't have to be linked with a priority. It might be fall between two. It might not fit any priority, or it might fit several. So it felt like they had to slot them into one of four. But for me, I don't know what that adds to the risk process.
Secretly behind the scenes, I've always linked the risks to the vision or the priority that we've had at the time. I came at it from the other end. I came at it from, you have this council priority, we have this bucket of strategic risks. You should know that these strategic risks affect your priority. So I always thought it was helpful, but maybe I don't, maybe it's just me. But I just thought, if you have council priorities, and I know you've got a strategic risk that could affect the success of your priority, why wouldn't you want to know? That's where I was coming from.
Suppose it's let's turn it around a little bit. So if we were to look from the risk score, actually the implications of that risk and the impact on the priorities, which is what you just said, is the important bit. So what are the implications for our priorities? So although we've put them into these categories, what is the impact of an unsustainable MTFP on having a fairer, ambitious Somerset? What does that mean? The so what question. Liz, Habib?
Could I just add a further complexity, which is the business plan that will sit under the council plan. And at the last corporate and resources scrutiny, Alistair Higton presented, and then I was looking at if the reasonable person on the omnibus said, that's your priority, how will I see that delivered? They should be able to work down the ladder of the business plan. And if somebody said, why are there so many potholes? How will that stop you achieving your priorities? You can work back up the business plan, and the risks are part of that. So I think it's how the risk register, risk statement dovetails in with the business plan, and the business plan and the service plans that sit underneath it are how you achieve your priorities. It is all interlinked and all interdependent. And of course, there are different teams of people working on different bits, and it's really important they work very closely together. Otherwise, for the reasonable person on the omnibus, it doesn't make sense. If it doesn't make sense to us as members when we're spending so much of our lives looking at these plans, it sure as hell won't make any sense to residents of Somerset. So I think this is really important work, and it ties in as well with the work we're doing on a risk statement, where we were hoping that we would do one risk statement that would form part of our budget setting, so that when we're budget setting, we're doing it within a context of risk. We're now working in two parts. We're going to bring forward one part where we'll be looking at risk to services where parish councils will need earlier notification because they preset during November. So we're looking at the first part of the risk statement coming forward for the executive in early November, which would be published at the end of October. And that will major on those risks where we think there will be an impact on, maybe an impact on parishes, because we don't know yet what savings will be in the budget for 24-25, and then looking forward to early 24, we'll be looking then at a full risk statement coming forward to the executive, which will then travel through scrutiny and audit to executive and then to full council and form part of that suite of papers that is budget setting. And I've also discussed with Jason and Nicola how we make sure that when we do a scrutiny meeting, a joint scrutiny meeting, as we did last year at Canalside, that we also make sure that the papers that make their route to full council through audit are also covered, because I'm absolutely certain from conversations I had with members last year that they understood the papers that went through corporate and resources scrutiny, but they didn't necessarily understand that there was another suite of papers that had come through audit. So I think with the challenges we have ahead of us, we absolutely need to be really clear and really smart in how we pull all of these papers together. And it's a big ask, but so far, Chair, I'm really encouraged by the very positive way all the officers are working together on this. Thank you.
Thank you, Liz. I've got Habib, and I'm hoping that that might close this item down.
Thank you. Thank you for allowing me to have a few words on this. In life, I think challenges equate to opportunities. So what I like to see is under risks headlines is a table how we inevitably come to overcome those challenges. So it's not just giving us these are a set of challenges, and they don't actually comply with what our fairer ambition Somerset is going to be, and we are not going to deliver X, Y, and Z. It's come up with some ideas because you've been in this job far longer than some of us, and come up with some solutions that we can actually discuss and take forward. So I would like to see some solutions from officers' point of view, and I would like us to sort of come together from a potentially some of us from the private sector with some ideas from the private sector, and hopefully dovetail all our ideas together. If that is, if you think that is something we can do. Thank you.
Liz.
My understanding is that's exactly what the business plan will do. So the council, if we go back to pre-vesting day and the conversations that Bill Revans as leader had with our chief executive, Duncan Sharkey, there was a really simple question as, can we produce a business plan, a corporate plan, call it what you will, before vesting day? Do we A, have the time? Do we B, have the focus? Do we C, have all the work of the former 5 councils complete enough to write a business plan? And I sat in the room when Bill said, and I completely agreed with him, we're not in that place yet. And so the decision was made to do a council plan, which is based all around the priorities, with the understanding that officers would then work on the business plan that sat underneath it. And below that comes all of the directorate or the service plans. And that is still the intention. And I think Habib's point will sit within that business plan, and then it will be broken down into service plans. All of this was a great deal easier in a small district council, I have to say. This is a colossal job, and I have no regrets that that decision was taken to work in that kind of phased way. I still think it was the right thing to do. I don't think at that point we realised quite what the financial challenges would be, both nationally and locally. So I think the fact that we're working on the business plan and the directorate or service plans now, they will need to fully reflect all of these strategic risks, and they will need some more flexibility in them than they might have done 2 or 3 years ago.
Okay. So Habib, Liz has recommended that your point is picked up via the business plan. So let's see how that works, and then we can keep an eye on it, and you can bring that back again if it's not what you're hoping to see. Okay.
In terms of timeline, Mr. Chairman, when will we be able to have a look and see?
I'll find out. I can't tell you today, but I will find out how much progress has been made and when we will expect to see that business plan come forward. Thank you. It's a really good question.
Yeah, very quickly.
Just quickly, 18 months ago, there was a Somerset business plan done because James Hassett was the chief executive of Somerset Western Taunton. He led on it for the county and the 4 districts. So there is the initial workings has been done. Thank you.
But there were a number of things done. The business plan for the county council was extended for a further year. There's all the LGR planning, it's a one Somerset business case. I think what we're looking for is a rationalisation and one single business plan to sit underneath the council plan.
We'll look
we're
forward
on
to that coming.
track,
We'll
Chair.
look forward to
I'll
that
find
coming
out more.
forward, Liz. Thank you. So are members happy to note the reports on strategic risk management? Angela and Pam, you've had some feedback from us in terms of how these reports could be improved. Hopefully, we will be able to see those at the next meeting, and we'll keep monitoring and iterating from there. Really. So, are members happy to note the work plan for the audit committee, which is item 12? Yeah. Mandate.
I have a question, please. When I looked at it, the 28th of September meeting bore no relevance or similarity to what we've seen today, paper-wise. And I think I would echo the thoughts of many that there were too many pages in what we had today. So my question is, if I then look at October, my suspicion is there's going to be potentially a lot more in October than we're seeing in the work plan. When we come to signing off accounts and audit reports. So can we sort of get a bit more of an accurate?
I think we're probably going to have to look at putting in an additional committee meeting at some point. If you look at January's forward plan, I think we'll be here for 2 days if we're not careful. So I think we need to look and see if there is any opportunity to do that, because obviously as a committee we're dealing with the legacy of the predecessor bodies. We've worked through some of that today, and hopefully that's helping to clear the decks a little, but there are still a number of pressing issues that we need to deal with. So absolutely take the point. We should look at the agenda against the forward plan to make sure that it reflects. But we perhaps need more discipline, and I agree to take the learning on board about not bringing forward papers that don't need decisions, because I think we need to stay focused on the stuff that needs those decisions at this moment. Jason, are you happy with that approach?
Yeah, part of the problem is in terms of the audits, the accounts, we don't know when some of the auditors' work will be done. As a priority for me, the biggest risk is you saying as a committee, no, can you defer that for another 4 months because it keeps the accounts open? For me, of all the things we do, we've got to get those accounts through as soon as possible, even if that means we either have another committee or shunt some things down the agenda.
Can I just make a suggestion, Chair? I don't know if it's helpful or not. We've got a September in the diary, an October in the diary, and then a January in the diary. Should we pencil in something now, somewhere in there, to get it in people's diaries? In the event that something comes along, you wouldn't have to wait for the January meeting, and it might help to manage that January agenda. Just a suggestion, Chair.
Yeah, I think we should look at dates. I'm not going to do dates in this meeting because it gets too difficult. So we'll take it offline and come back with a proposal around potentially adding an additional date. If it isn't required, we can pull it, but it's better to have it in and remove it than the other way around. Steve, did you have a question?
Yes. Can I just reiterate what was inferred earlier, that we possibly have some statement accounts training? Because for novices like me, that section was heavy going.
Yeah, that's fine. I think Nikki's agreed to pick up the additional training, so. Perfect. So is there any other urgent business that anyone would like to discuss? If not, I'd like to thank you for your time today. We've had a so outside of the meeting, I have actually circulated to committee members a question about whether we should rotate the location of audit committee meetings. There was no strong consensus that there would be any value in doing so at this moment in time. It's a question we can keep open, but for the time being, my proposal is that we keep meetings here at County Hall and Taunton. And if there's any material change, if anyone believes there's any value in moving for a specific purpose, then we can do that. But for now, all future meetings will be in this room. Okay. Thank you all. Hope you have a good rest of the day and see you next month.